Hey, good morning everybody. This is Brian with NetPicks, and I want to welcome you to this demonstration live in the market of the Counterpunch Trader. So we're going to get started here in just a moment, but and I'm going to turn this over to Troy, who's going to take you through the demo this morning. But before we do, just a few things to note. Please, if there's anything today that isn't clear to you and you've got a question, go ahead and get that into the question box. You should see that under questions on your panel, and so Will and myself and Troy will be looking at those behind the scenes. So at any point, feel free to do that. This demonstration today is meant to be live in the market, so we don't know what's going to happen. We're going to take things as they come, and so we will just kind of see here over the next hour what the market gives to us. So we're going to talk about trades obviously from today. We'll talk about some trades from yesterday that were very, very powerful and profitable for us, and we'll get into that here in just a moment. So with that said, I'm going to turn it over to Troy. Troy is the author, for those of you that don't know, of the Counterpunch Trader, and he's the head trader of that strategy. So he's going to be taking you through the balance of today's presentation. Troy, it's all yours.
Great, thank you. Thank you, Brian, and thank you everybody for joining us this morning. I see a lot of people in here, some familiar names, and a lot of people that I don't know, but I appreciate your time and interest in the Counterpunch. So we like to do these live demos sometimes just to kind of show you what we face every day as traders with this strategy. And what you're seeing here are some of the trade plans that we do in the trade room all the time. And a couple trades have just kind of triggered in and fired off right away. One of them, one of my favorites, is this Russell emini trade. And let's just take a quick look at it. You can see there's a lot of stuff that happened in the pre-market. With the Russell, we're just not interested in any of that. We're waiting for the market to open at 9:30. And right at 9:30, you can see there's a setup, and the price comes in and is able to grab that entry. And this is one of those setups that started out getting filtered, right? You see this gray trade right here? That means it's filtered because we're in the chop zone. And if I put the 50 EMA on here, you would see that it's trading against it. And so that's one of the tricks to staying out of chop. But then the filter comes off and the trade becomes valid, and we're using a special tool that adjusts the entry down so that it has a better chance to pull back and get the entry. You see, we call that a chaser. Kind of chases the entry down a little, and it was able to pull back and hit it perfectly and come straight down and get to its first target. Now, if you know anything, if you've seen this presentation, or if you've learned anything about how the Counterpunch works, our first objective is to get to that target 1 so that the stop will move down and get to a break-even position. Right, so we like to take the risk off the trade, and in this case, that's exactly what happened. Right, you can see that it pulled back to get the entry, came down, hit target 1. By the way, target 1 was good for 13 ticks. I mean, one could certainly take profit there if they have multiple positions. Normally, with a single position, we're going to go to target 2, or we'll trail. So here's another trade setting up. You know, the markets are a little bizarre right now. We're a few days away from a major world event, something that's never happened before. I mean, the U.S. election has happened before, but not quite like the election we're facing. I think we can all agree it's been pretty bizarre. And so the world is, you know, reflected in price action if you're a believer in the collective wisdom of the market. So there's a lot of indecision. All right, so, you know, it's interesting to see how the Counterpunch behaves. It's done really well up to this point, so we'll see. Got short right there, so when you click on the bar, you got your whole trade, 1162.8. You got your targets, you got your stop. It's all there in front of you, and you can quickly just jump on your platform, whether it's the Matrix or the Active Trader, or the Ninja Dome, or even with MT4 if you're trading forex, and place your trade. The entire trade is planned out. All the trades that we take are based on well-tested trade plans that have proven to work for a long, good amount of time. So another trade that triggered in just while we were opening the trade room, and it's still going. We don't know what's going to happen here, but this is the Dow emini. You can see that it at 8:18. There was a setup right at 8:30, which is 9:30 Eastern, right? This is Chicago time, 8:30. We're looking to take a trade, and you can see right here it's at 8:27, 8:28, 8:30, and this is a trade that we're what we call able to get in sync with. So we can jump on board that trade at our start time, and that's exactly what happens right here. It pushes through, and it doesn't quite get to its target 1, which is coincidentally where the stop was on a prior setup. So one of the cool things we can do with this tool is we can open up the calculator really quick. You notice that started right at 8:18. I don't want to have to see everything that came before. Not interested in it. So I could quickly type in this 8:18 start time and make all that go away. So now I just see the trade I'm interested in here. It's just one of the little convenience tools that we've built in to our calculator. So we'll let that play out. Also, this is a trade plan. You may have noticed this blue and red line, right? The Russell, we don't use that, but on the YM and on many other charts we do. This is called our directional indicator, and it helps filter out some trades. Basically, when the line is red, we only look to take short trades. When the line is blue, we only look to take long trades. So it's called the trend mode indicator, or the directional indicator. So we're going to stay short here, and hopefully this is going to come down, and we'll just see what happens and watch that one. Sometimes it takes more than one trade to reach our goals. For example, this morning on crude oil did pretty well. It hit its power of quitting goals. It took a few trades to do it. The first trade triggered in, and we start right at 8:50, and sometimes you got to throw the hook in the water and the fish gets away, right? We know that some trades are going to lose. This one didn't work out, but then we were able to jump right on the short, and the short came right down and hit the perfect target, right? So that basically canceled out the other, because they both, that one lost the same as this one won, basically. So then we needed one more trade to get to power of quitting, and you could see that it got short here and it came down and it hit the target perfectly right on the nail. Okay, so at that point you're going to be moving your stop down. The trades are really small. Crude is very compressed. Again, it's just a reflection of what's going on right now with the election. So while we're on the subject of crude, let me just show you one of my favorite times to trade, which was yesterday during the crude oil report. We did this live in the trade room, and I marked this up for you because if you just took this trade once a week, you would do very, very well. It has a very high winning percentage, and it just continues to do great. So once a week, the crude oil inventory report comes out right at 10:30 on Wednesdays. On a 4-day week, it comes out at 11 a.m. on Thursdays. But you can see that when it comes out, there's this big, huge reaction, right? And I marked actually where it came out right here at 10:30. And so the trade plan is wait 2 minutes. Some traders like to wait 3. Some traders like to wait 5. I like to wait 2. Okay, and that's the trade plan we use in the trade room. And so you can see there's a lot of reaction. There's a big spike, and then the market kind of doesn't know what to do, and then it starts sorting itself out. And right at the 2-minute mark, you get a setup. It's actually 4 seconds before, but we can get in sync. Like, remember I showed you get in sync? So here it's at 10:32, and we're able to get short right here. And the whole trade is laid out right there, so you can place your trade. You go in with a bracket order, right, an OCO. So when the entry gets hit, it activates the targets and the stop. Right? It's all connected. So you always go in with templates. Your stop's always in place. Your target's always in place. So this comes down, and you'll notice that it at first is like, uh-oh, okay, this market's still kind of behaving erratically, but the stop is up here. Let me just see if I could scrunch this down and show you a little. See, the stop is up here, and we might have to get long, but notice how all these setups are perfectly placed. The size, the whole trade profile was perfect, because look what happens. It all holds, and it ends up coming down, and it actually comes down and hits target 1 right there, you see? And then the stop pushes down. So target 1, I mean, you could take profit there. That was good for 14 cents. I was holding out for target 2. That was good for 22 cents. But now this is pushing down, and ultimately it stops out for just an 8-tick gain. So it's a partial winner. So we're usually trying to get a target 2 winner or 2 target 1 winners. Okay, that's the basic day trade plan that we pretty much use on just about everything. All right, there's some exceptions. So we need to take one more trade, and you can see there's a long trade. Notice that it's gray. That means you don't take it. It's filtered out, and we can turn those off. We don't even have to see them, but you'll see we entered into the chop zone. But sometimes the chop zone will come off, or we'll get a change in market conditions that the filter is no longer necessary. So I like to see them, because then when it comes back, like here it came back, this is actually this trade. But the market conditions changed, and so it became valid. So that's the second trade, and it triggers in right there, you see? Comes off a little bit. You know, markets always do that. They stair step up and down, but then look what happens. It plows right on through. It hits its money management level. The stop moves up. Hits its target 2. I mean, perfectly, right on the nail. Hits target 3. Zooms up. The stop moves up, and it ends up hitting its goals. And yesterday's crude oil report, 2 trades and finished. And that was good for, 14 cents to target 2, 20 cents to target 3. Looks like the trailer probably got 13 cents, right? Nice trade. So that was crude oil and the crude oil inventory report yesterday. Again, one of my favorites. Let's see what else is going on today. So the YM looks like, yeah, the YM you can see is completely range bound and was not quite able to get to target 1. And so now it's long. We'll see how it does. The YM has been on an amazing profit run. It's been hitting new equity highs almost every day, but for sure every week for months. So, it's bound to have a tough session from time to time, but it's been a real winner all year long. It's been making record profit levels. This exact same trade plan has been running for 2 straight years. So really excited about that. Let's see, soybeans is another one of our favorites, and you can see that there's this one trade that zoomed right on up, hit the perfect target, and then fell back down, right? But we start right at 8:30, right when the market opens at Central Time, and you'll notice that this is at 4 in the morning, right? And so 8:30 comes right here, and it's too late. So it was a nice trade. Unfortunately, it's not a trade that we can take. We're not even up. I'm still sleeping, But anyway, we're not interested in trading during this time. So we're still waiting for the first trade of the day on soybeans. Okay? So we'll just keep an eye on that one. And let's go back to the Russell, because the Russell, if you'll remember, we hit a target 1, and then we need to get either one more target 1 or a target 2. So it did get short here, and the market turned. The market turned and went long, and the counterpunch was quick to react. Unfortunately, this will be a partial loser, but the stop was up here, and you're going to get long a little bit on top of this entry, a small little adjustment we teach in training. So you get a partial loss, but then look, it zooms to a full winner. And when you add up those 3 trades, that's going to hit our goals, what we call power of quitting. And power of quitting, of course, is the whole way that we continue to enjoy ongoing success, because what our primary goal is as day traders is to be able to quit trading as efficiently as we can with a positive result. In other words, if we can quit positive and grow our account on a majority of our sessions while containing our drawdown on the few sessions that we cannot quit positive, like this, we can grow our equity and we can continue to prosper, right? Because growing our equity is why we trade. That's what making money is as a trader. It's growing your equity. You have to get through some losing trades to get to the winners to quit positive sometimes. You'll hear me talk a lot about, oh, today we were one and done. Well, a lot of times we hit our goals in the very first trade, right? And some trade plans only want to take one trade, win or lose. In fact, that's how we trade soybeans, win or lose, one trade. Well, soybeans has won the last 7 out of 8 sessions, which means it's won the last 7 out of 8 trades. So that's growing equity. That's making money. Then as you get to a certain level with your account, you can just increase your position size. You don't have to trade more to make more money. And what we find over and over again as we continue to do what we do, continue to test new ideas, research out new trade plans, is that the less you trade and the sooner you can get to your stopping time with your trade plan, the higher net average profit you will make per trade when you factor in all wins and losses. That's the key element to success. And so many traders don't know that. They overlook it. They think they want a higher winning percentage, or they think they want to trade more. And that's what usually hurts traders. You want to be able to keep your money. You don't want to just make your money and then give it back, because markets trend and markets consolidate, markets trend and markets consolidate, right? So we want to take the best we can when we can get it and then just get out of the way. We could always do a different trade plan if we want to keep trading, but you use the same principle. Okay, so it's a real important point, usually is lost on a lot of traders. So let's see, let's take a look at some forex. In fact, some forex charts we can look at here. Obviously, the pound and the pound pairs have been trading really well ever since Brexit. It's like that's been a really good market. And I just thought we'd look at today. I like the 5-minute chart, but you could use tick charts, you could use range bars, you could use Renko. Counterpunch has been recently enhanced to be Renko friendly. It works with Renko, but the 5-minute chart's pretty cool because, well, it works with MT4 really well. I'll show you an example. So this trade is still going from earlier today. Now we can enable the calculator to show us more setups if we want, but I just wanted to show you how nicely it was able to break out, and I don't know, maybe there's a news release or something that happened here, but you could see that it made 25 pips, 34 pips, 43 pips, right? Spiked up. Hopefully if you get a gift from the trade gods, you're managing this. Sometimes you have to just know when to jump in and take some profit, because you can't really program, you know, the gifts from the trader gods, but they happen. But the point is, with this kind of trading, we're going to manage our trades a little bit differently. We want to take 25% off at each target, because target 1, which is 25 pips, I mean, that's a decent target. I wouldn't mind making 25 pips, but I also want to make more. So we could use the flexibility of forex and scale out. And so I usually make the targets a little further out. So these targets give us the really nice risk-reward ratios. Down here you see a risk-reward ratio for each target. And you can see it's better than 1 to 1, almost 1.5 to 1, and nearly 2 to 1. And like this, you want to, like I said, you want to use that. And so if it only goes part way, like here's a much bigger trade, right? One of the things that the counterpunch does is it dynamically adjusts to market conditions. It's like dancing with the market. It knew this trade had to be smaller. It knows this trade has to be larger. Now, I don't know if you could see that little tiny dot right there. That little tiny dot's very important, because we utilize another set of tools that comes with the counterpunch calculator. We call it the profit protection tools. And so while our target has been adjusted further out, here's target 1, right? Here target 1 was 25 pips away. Right here, target 1 is literally 82 pips away. So it's a big trade for a day trade. Lots of volatility. So we start implementing profit protection part way up, and that's also dynamically tuned, right? So when the price comes up and actually gets to that level, well, notice that the stop automatically starts moving up and locking in some profit, you see? And it actually moves up to here where it stops out. So it stopped out at 24.77. It couldn't quite get to that 88 pip level. but it got long at 24.38 and it stopped out at 24.77. It's not bad, right? What's that, 39 pips? And then that trade was pretty much over. So it's smart. It knows how to manage these forex trades, and of course we set the calculator up to take advantage of that, right? All right, so in the meantime, we've got some live futures trades going on here. Let's jump back and look and see. All right, crude oil. Crude oil got short. So this trade was actually really small, and the calculator is set to not move the stop because the targets are just so small. It wasn't interested in just getting 7 ticks. So depending on how you trade, you're either taking it or you're not. But now it got short, and it is interested in this. You see? It's the way I got the calculator set up based on how I like to trade. So this came down, and you could see nice trade in play right here. So while the target was perfectly accurate, right? I mean, it hit it perfectly on this earlier trade. The way I have my calculator set up, I want bigger trades than just 7-tick trades. Okay, so that's just a personal preference. But these calculated targets, you can see, are very accurate mostly to the market condition. And they're going to, so our goal is to try to hit fixed targets, but as we grow our accounts and can add multiple positions, we want to leave a trailer on to try to pick up the really big trades, right? Because like this, we hit the home run trades sometimes, and those can make a huge difference over time. You really knock the ball out of the park on some of those. Okay, so that's going, and it looks like soybeans. Yeah, still waiting on a trade on soybeans here. Let me just take a peek if there's any questions before we look at some more examples. So far, based on what I've shown you, is there anything that you want to comment or ask about? Feel free to type them in. Let's see, I'm new and have the trend jumper. How do I get in the trade room every day? Yeah, okay, so Tom asking about the trend jumper. So we allow trend jumper traders into the Counterpunch trade room because the trend jumper trade room is no longer operating. It was just something that we felt we had to do. And so you can bring your questions in, and I'm happy to pull up examples, okay? But this is basically a Counterpunch demonstration, not a trend jumper demonstration. But in the Counterpunch room, any trend jumper questions that come up, we will open up and look at charts and discuss whatever is necessary. So don't be shy. Just come on in, and if you have any questions, feel free to ask, and I'm happy to answer them. Okay. What else? When you're getting in sync, are you waiting for the price to once again trigger? Max, yes, that's correct, but there has to be certain conditions met. So what we're looking for is if a trade has gone too far, for example, if it's already hit a level where we're going to be moving our stops, we're not going to then take that trade. We're going to let it go. Or if that trade is stopped out, or if there's a new setup in the same direction, we'll just go with the newer setup. So there are rules that we're going to follow that guide whether or not we get in sync. Okay, and mostly it happens during the start time, but there are cases where we might get in sync after a news event, and even some other finer points that we might do based on certain trade plans that is taught in the training. But that's basically, those are the rules that we use for getting in sync. And if you think about it, that's actually a really nice thing to do when you're trading a slower time frame. So for example, imagine if you're trading a 4-hour chart, like the new trade plan that's just been published is this pound-yen 4-hour chart. There's some great trades on that time frame. And you could look at it on the chart and go, wow, that looks great. But when you start living a 4-hour chart and it becomes this thing that takes over your life every 4 hours, you got to pay attention, right? It becomes something that most people can't trade. And so what we do is we do what's called snapshot trading, where we'll you will create a trade plan where you're only looking to take trades during a short window of time. So there's this plan that just came out that was just published on the Owners Club where you look to take trades only at the 4 p.m. bar and the 8 p.m. bar, like twice a day, and that's it. And if a trade set up earlier, maybe hours earlier, could be numerous bars earlier, you can get in sync and still take that trade, you see, based on the get in sync rules. So it works really nicely. So you could take advantage of slower time frame charts while not having it taking over your life using some of these concepts. And we use them in our day trading, but we also use them in our swing trading. So hopefully that makes sense. All right, let's see what soybeans does. Soybeans has kind of been slow today, which is unusual. Usually we get these trades quickly, but there's a short trade, and you can see it got short, so we'll see if it can work its way lower. We'll keep an eye on that. Heating oil is another one, just got short. The Russell got short. Even though we're done with the Russell, you can see another trade triggered in. Got to target 1, right? The crude oil trade we were just talking about just stopped out with its trailer. You know, pretty accurate. It almost got to target 3, missed by, what, 2 ticks, I think? If a target misses by 1 or 2 ticks, I'm usually pretty happy. I'm going to do something to make sure I'm making some money on this trade. A lot of times, if it like misses by 1 tick, which will happen, I'll just fail safe it and get out at the prior target. Or you can just use your trailer. You know, there's different methods. There's different styles of trading it. It's very flexible. So we were looking at forex, and there's a couple other good examples. Well, first of all, some of these end-of-day charts, if you like to swing trade, can be really, really good, right? The pound Aussie, this is one of those charts that you just want to have on your hot list because it's performed well over the years and continues to do so. I mean, you could see here that there was a losing long trade. It came after this winning, there's a winning long trade, right? And it only got to target 1, but that was 443 pips, right? And the trade before was a nice winning short trade. All right, so then you get a long trade that loses. That's going to happen, but it flips right over to this winner here that comes down and hits all these targets. I mean, look how big this nice trade is, from 542 pips, 815 pips, 1,087 pips, and you might be thinking, oh my goodness, that's so large. How am I going to trade that? Well, don't forget, with forex, you want to use what they give you. You have the ability to be flexible with your position size. You want to be creative with, you know, combining up micro, mini, and full-size lots so that you put on the proper risk ratio. I mean, think about this. If you put on a trade where your risk is 2% of your account and you only could afford micros on a big trade where you're risking, you know, 780 pips, you know, you want to use micros maybe if your account's not that large. But imagine a trade where you're only risking 24 pips, but you over leverage and you put on a size that's way too large. Instead of 2%, you risk 20% of your account. Are you going to be worse off if you lose at 24 pips? You are, right? So my point is, it's relative to your account size, and forex allows you to put on smaller positions, and that's what you should be doing, because then, you know, when a trade like this happens and you lose, okay, you stub your toe, but you don't lose your legs. You flip right back around. This trade ends up losing, for example, 435 pips. It's offset by the one you just won, but then you flip right back around and you win literally over 2,000 pips, and it trails all the way down to here. You see my point? So it's a matter of trade planning. It's a matter of following the training where you learn how to place these trades properly, and you realize that winning trading is more than just your method. This is the method, counterpunch. But winning trading is more than just that. Counterpunch is a broader strategy that it includes money management, risk management, your own trade psychology, being able to execute and discipline. So there are exercises that you do, there are things that you train on that teach you how to put it all together, all the important components, right? That's the three-legged stool of trading, we call it. You take one leg away, whether it's any of those legs, and the stool is not stable anymore. It's going to topple over, right? And then finally, you need a strong foundation to put it on. Well, that strong foundation is part of the training also. It's called the Steps to Success Guide. It's in the Owners Club, and it's something that we have all our traders do because it teaches you how to put it all together and build something that's going to be everlasting, that's going to get you to your financial goals. It's a step-by-step process, you see. So I wanted to show you this, though, because it just got long. I mean, that's a real trade, getting long right there. This one, it's like it kind of got in and got out really quick. It was a real small little setup. Maybe you work around a key level. We'd have to look and see, but now it's getting long, and it looks like it has a good chance, and that's a pretty decent sized trade too. You can see 309, 464, 620 pips. All right, so that's an end of day chart. It's a good one. It's worth trading. It continually makes thousands of pips a year, basically, when it all nets out. All right, and then a 15-minute trade. It's working on all kinds of time frames. This one just triggered in. It's still part of the European session. It's a slower chart. Again, this is a hard chart for some people to trade because you got to pay attention, right? 15 minutes a bar. I prefer faster charts, but you can set this up, and you can set it up so that it automatically manages. You have to pay attention when it hits the money management so that it moves the stop. You have to know when to do that and stuff. But you can easily put a horizontal line right there, and then you could tell it to send you a message, and you get the message, and then you could jump on and move your stop. I mean, there's a lot of ways to trade charts like this. It just requires figuring it out if that's going to work for you with your lifestyle. And I like the Aussie yen too. The Aussie yen is almost a proxy for the U.S. market. It kind of moves in conjunction with, and you can see this trade triggered in again during the European session, 5-minute chart. And it handled it perfectly. Look at target 3. I mean, if you're at the right edge of the chart and that happens, pretty darn happy, right? That was good for 28 pips. But you know what? Hide the time frame, hide the symbol, and doesn't it all just kind of look the same? Really, no matter what chart you put it on? There's very little changes going on inside of the calculator. It's pretty much everything I'm showing you is kind of plug and play. Plug and play, plug and play. Not a lot of changes. What else? Am I missing any questions here? Can you give me some examples of some good 4-hour forex trades, please? Yeah, Enhart. Let's see if I have any charts up that I can show you. I don't know that I have any 4-hour charts. Let me see if I can get one open. Actually, I do. Well, this is on MT4. I haven't shown you this yet. So I actually have a 4-hour chart right here. It's a US Swiss. And here's some good examples right here. So this is using some of the same techniques that I showed you with our futures trading. You have the directional indicator, so when it's red, you only go short, right? And here's a short trade that triggered in right there. The stop is up here. It's tracking the trade. So MT4 has the level of sophistication that you see with TradeStation, for example, or with NinjaTrader. You've got it built into MT4 as well. Then when it comes down, it's going to hit the profit point here, and I don't have the dot showing, but it is in the calculator, and it knows. That's why it pushed down and started locking in profit and trailing the signal line all the way down. It just hit a target 2, right? And that's a 4-hour chart right there. And if you click on the bar and hit the Alt key, you freeze everything in the data window. So there's your entry, your stop, targets, your risk-reward ratios right in here. This made 117 pips to target 1 and 157 pips to target 2. You'll notice it says 1170 and 1570. You have to remember that there's that extra digit. So the extra digit is 1/10 of a pip, so I pretty much ignore that. And I've got a tool in here that actually rounds everything to the nearest pip. Okay, that's why you only see zeros there. You could turn that on or off, but it's pretty smart how that works. So there was a short here as well. There was a short here, right? And then you see there's some possible long trades, but you know what? The line is red, and when the line is red, you ignore the long trades. So this short trade actually worked perfectly as well, and then you have these additional short trades that also worked. So it's really just a matter, even this little one that stops right up here, and yet it comes down and stabs down to all these targets. See? And this white trade comes down, and it comes all the way down, and it just hit its target 3 right when this trade hit its target 2. So you don't have to display all these trades. Even the long trade right here, look at that one. Line was blue. Look how it stabbed right up and hit the perfect target 1. I mean, that's a profitable trade. You take off some of your position, right? That was good for 43 pips. And then you're locking in some profit, and then you get out of the way, and then you go short. You know, it's all relative. It's relative to the time of day, the type of trading you want to do, whether you want to swing trade or what have you. But this is a really good example of a 4-hour chart. The U.S. Swiss is worth looking at. I also think a lot of the yen pairs are really, really good. And on the Owners Club, there are some customized trade plans that we've used some of the more sophisticated tools to create specific to the snapshot trading idea, where we've tested certain trade plans where you only want to take these trades like for, you know, a short amount of time. Some of them test out well where you could actually take it any time you want, but we stay to the theme of our trade plans, right? Because we know we can't just be 24/7 in front of our computers. You shouldn't want to be. You shouldn't want to have to sleep with your laptop or pull off the side of the road. You know, you don't want to trade like that. Maybe at first it seems seductive and exciting, but you know, you do that day in and day out and try to make a lifestyle out of it, you find it typically doesn't work. So we have to figure out how to use these setups in conjunction with how we manage them with our lifestyles, right? Because in the end, that's why we're trading, for a better lifestyle. Hopefully you all agree with that. And, you know, just to quickly show you on the pound US, this trade getting long here. I showed you this on TradeStation. Here it is on MT4, and notice how it hits that perfect target 1 right there before coming off, and it's going to stop out for a partial gain. But that target 1 was worth, you know, 55 pips basically. So notice here that it looks like it's getting short, but if you look carefully, this entry is gray. And the reason why is because we're using the trend mode indicator. When it's blue, we cannot go short. We have to go long. I mean, yeah, we have to go long. So up here when it turns red, we can now take that trade. Okay, but I have to activate the calculator so that it actually knows to keep an eye on that trade so that it comes back. Okay, I have this calculator set up a little simpler, but I can easily flip it on, because when the line turns red, the calculator is going to know, all right, show me the entry here and show me the targets. It's going to know to do that, okay? But I have this set up in a very simple way. Notice that there's no trailer, there's no tracking, there's no, like on the Swiss example, the US Swiss, I've got some of the tools enabled so that you can see the trade tracking, the automatic trailing, okay? But a lot of people, especially when you're learning, it's too much. So you can easily learn this strategy in a much simpler fashion by turning some stuff off. We've really made this tool set user-friendly. All right, so this is an example of a very simplified looking chart where you can just trade the targets and trade the lines, and you do your own tracking. So you have a lot of choices with the counterpunch. We've designed it to fit the style of, you know, many different ways of trading. I personally like to trade the counterpunch with just the exhaustion dots and the momentum line. I literally turn off the trade setup sometimes. Obviously, I created the strategy, so I know it really well. But you could literally trade it as simple as that, but you could also then turn on the convenience tools when you want to see the trade tracking and what have you. So there's a lot of flexibility with the counterpunch. Okay, so where are we here? You can see the Euro-US 15-minute chart just stopped out, right? We were just looking at that one from earlier. It's literally stopping out right now. That one still picked up a partial profit. It went from 1093 and stopped out at 1074. You know, could come down and still hit targets, but you never know. I mean, the high trend is looking like it wants to turn over. So it's reacting accordingly. Let's see, what else? Do we stay out of all trades during economic events? That's a great question that Stefan asked, and the answer is yes. And the reason why, obviously it depends on the market. I mean, if there's an economic event that's not going to affect soybeans and maybe is inconsequential, you don't have to stand down for soybeans. But what you don't want to do is get into a trade where you have no control of your executions. In other words, your entry gets hit and the price zooms right on through and there's no market for it. No one on the other side of your trade. And by the time you get filled on your entry, it's at your target. And so you want to exit. You think you won. The chart looks like you would have got in and got out and won, but in reality you didn't get filled until the entry. I mean, until the target. You see? And that's what we want to avoid. We don't want to be in a trade that we're going to lose control of our executions because there's no one on the other side to take those trades, you see? There's something else I want to show you. A lot of times I'm going to use a counterpunch trader just to get a bigger overview or a picture of things. Like, you know, crude oil's been kind of bizarre, right? It was $100+ a barrel. It was one of our all-time favorite markets to trade. It's still one of my favorite markets to trade, but it's a lot different now. It's range-bound. It's between $40 and $50 a barrel, basically. It doesn't have the same oomph. So what I like to do sometimes is put the strategy on a daily chart. This is just a bar chart, and I'm just using it as a barometer to kind of see what's going on, but it's still amazing how accurate and how the strategy knows to it shows you what's going on, basically. Even, I mean, you could scrunch it down. I know maybe it's hard to see. I can make this a little bigger. I can even make them candles. But, I mean, even a trade like this, look how accurate that short trade stabs down and hits its target 3 before it then gets tired and turns up. And then look how accurate that target 2 is. I mean, is that tradable? This is filtered out because of a filter, and yet it's still accurate to target 2. Look at this one, this purple into target 3. Look across. Look how accurate that is. And this is just popping it on a daily chart, right? There's another long trade here. You can tell by the targets. Again, accurate. This trade, I mean, it's just missing its targets. This little one here, look how accurate that is, right? You see that? Just continue downward. Now, you're not going to trade futures with a daily chart. Look at the last thing that just happened. We saw oil just fall. Everyone thought it was going to be living over $50 a barrel. It was up there, you know, for several days, over a week, and then it just fell off the cliff. Well, look at the target. This is happening right now. When you have a tool like this and you learn how to use it, you can apply it to so many things. Now, how would you trade this? Well, one way you could trade it in a very effective way, taking advantage, swing trading a commodity, right, without the huge risk of a futures. I'm just going to copy and paste this chart, and let's change it to USO, which is US oil. That's an ETF. Well, it doesn't look that much different, but you'll notice that the price is $10.50. It's not a $45 per barrel futures contract. It's an ETF trading in the tens. It's trading over 6 million shares today. Isn't it simple to just buy a put option right there? Or several, and just scale out at each target and trail the signal line just like you would any other market. You could use the exact same techniques. You could choose well-selected stocks and ETFs. I didn't do anything. All I did was change the symbol. I didn't change the configuration in the calculator. I mean, I could certainly test it out and see if I could customize it better, but look how well it works without doing any of that. Look at this short trade right here, and look at the target, how it's calculated, and look where the bar ends up stabbing down to, right there. You see that? It's uncanny. It's not going to win all the time. Nothing can win all the time. You don't need to win all the time. You just need to win more than you lose, and then manage your trades properly, the second leg of the stool, and then be disciplined enough to be able to execute your trades. And then, of course, that foundation, which I call the foundation of belief. See, we teach you how to believe in this so that you can actually trade it effectively. If you don't see what it can do and learn it and understand it properly, you don't have the necessary belief, you fall into the same trap that most traders fall into that continue to lose money because they haven't done the foundational work. You have to believe in what you're doing in order to be able to execute properly. But the more you see this, the more you see it working, the more you learn how and why it works, that belief starts to take shape. And then you learn how to focus in on the best charts and trade plans for you specifically. We're all different. We all have different needs, different abilities, different times when we can trade. So it's really important to get this right. So that's part of what the training is all about, is teaching you how to figure out what is the best thing to trade for you. So a lot of people want to just take advantage of the swings that happen with commodities, because commodities trend. And anything that trends is very tradable. But you can't necessarily swing trade futures because it requires so much risk. But with all these great ETFs now, you can swing trade futures. You just use a different instrument. So if you want to swing trade the ES, you don't use the S&P, the ES futures. It's way too risky. Use a spider, right? You don't swing trade the NASDAQ futures, the NQ, but you could swing trade the QQQs. See my point? We got traders that are day trading weekly options with 10-minute charts of the indexes, like the IWF, the Russell, for example. One trade a day. They could take advantage of the higher time frame. It's slower than a tick chart, slower than the range bar, and they flip a weekly option as a day trade, one trade a day using the 10-minute chart, having tremendous success and using the exact same thing I'm showing you. In fact, I'm just going to copy and paste this right now. I'm not going to do anything but change the symbol to IWF. I don't even know what it looks like. I haven't even looked at it today. Let's take a look. IWF, 10-minute. It's an interesting time frame, but why not? Well, here's yesterday's trade. Remember, one trade a day. Triggered short, came all the way down. Was able to get to target 2. Look how perfect that is. And then stopped out here, and then it got down to target 3. Look how perfect target 3 was. Of course, it would have stopped out. But still, one and done, a winner. No trades yet today. Look at the day before. One and done. Could you buy a weekly put option, pay very little for it, get out at the targets, and make 15 cents, 16 cents? I mean, 16 cents on an option, it's 160 bucks. It's like a futures trade, but with very little risk, right? Not every trade's going to work, but you can see that they pretty much do for the most part. This trade, unfortunately, would have worked, stopped out. It was a losing trade. So you sell the option back. You're going to recapture some of your premium. You don't even lose the whole amount. You're not holding the option expiration. You see, there's so many ways to use a strategy. It's really just limited to one's own creativity and training and knowledge, right? Brian, I'm not sure how much more time I have or how much longer we should go. I've shown a lot of examples here. This is what's going on with soybeans. It triggered short, but not much. You just got to hang on and see what happens on that one. Again, who knows? We're a few days in front of this big important event that's going to take place, the U.S. election, and the markets are definitely reflecting the indecision. So when that happens, I'm typically going to trade less. I'm going to try to get my trading done really quickly, and I'm either going to win or lose, and then I'm going to be out of the way and wait. Yeah, sometimes you just have to use common sense. But you can see the strategy has worked pretty well on just about everything. Not everything today. The YM had a couple losing trades, and then it got a nice winner, depending on if you were to how you handled that purple trade. So the YM has been pretty erratic today after a really nice session yesterday. Let's look at yesterday. Yesterday on the YM, remember we're starting right at 8:30, so it triggers in right here. The first trade, 8:36, comes in, and look at that. So yesterday was nice. Let me see what the questions are. What's the pattern of yellow, blue, green dots in sequence? Yeah, JP, I see Will is answering some of these questions, but let's go back a little and deconstruct a little bit just to kind of give you an idea of what I was thinking of when I was creating this. In fact, okay, so here's a chart that is just a price, nothing else. And as traders, we have to live over here on the edge, right? And we might be able to guess right that this trend is going to continue up, or it's not. It could go down. We don't know. All we can do is guess, right? So one of the basic building blocks of the counterpunch is to figure out when the buyers get tired. Because when the buyers get tired, there's a good chance that we want to start thinking about jumping on board with the sellers, or vice versa. But sometimes there are different levels of exhaustion, right? Maybe the buyers are just pausing and catching their breath, and then they're still going to continue. Maybe they're not that tired. So that's what a trend looks like. But sometimes they're way exhausted, and the market turns, and it's a counter trend trade, right? So that's where counterpunch is. That's where it gets its name. So you think about Muhammad Ali rope-a-doping against the ropes, right, all covered up, waiting for his opponent to get exhausted, and then he comes out firing away. That's the basic principle of the counterpunch. That's why it got it the name that it's got, and it's all based on the exhaustion. So these dots, and I teach you how and why this works in training. It's not going to be something we're going to talk about in a demo. It's not like black box. I teach you how and why this works. But it identifies levels where exhaustion takes place, okay? So, and it gives you a really good visual because you can see trends, you can see consolidations. I mean, you can see it on the price bars, but the dots give you a fast visual. You can even see the false breakout, which leads to the exhaustion and the nice trade. One of the things you learn in training is to look for that, right? A lot of people like to trade the breakouts of these consolidations, but those are typically inexperienced traders because those are usually head fakes. It's the move in the other direction that ends up being the strong move. So you look for that, right? So the next thing, though, that we need is, the next piece of information is this indicator here, which is our momentum line. And when you get these two things combined, you literally have enough to be able to make really good trade decisions. Now, of course, we've taken it to a higher level with the counterpunch, but these are the first two building blocks. When you're above the momentum line, you're focusing on long trades. So now you know that the sellers are tired and we're trading above the momentum line. That's valuable information. That is more information than the majority of the traders have, and it puts you in a very advantageous position. What we do with that information, of course, certainly makes a huge difference, and that's where we create the rules that we use, the calculator, the additional confirmations, the additional building blocks that create our counterpunch setups, okay? And that's all built into the calculator. So the calculator knows when to show us trades, right? Here it's tired, the sellers are below the momentum line, and some additional pieces of information that it needs, including the high trend, what's happening on a higher trend, right? Gives us this nice trade. You see, and then there's some trades that don't trigger in. This one doesn't trigger in. It looks like this one triggers in. Technically it does, except that as smart traders, we know that we can see some support over here. So one of the things I'm going to teach you is how to make small 1 and 2 tick adjustments. That trade would be avoided. Okay? Looks like it hits it here, except that it's going to cancel. Okay? There's a reason why a long trade didn't show up there. I'm not going to get into the training aspects of this. But that's the basic building blocks of how the counterpunch works and why it works so well. All these things are going to happen on any chart, any time frame, because it's all based on price action. There's nothing lagging here. This is all results of price action itself. This momentum line is like this uncanny line in the sand that marks the balance point between buyers and sellers. So it's an excellent support and resistance marker. That's why we trail it and hide our stop around it and stuff like that. See how the trailer is tracking it all the way down? There's a reason it didn't stop out when it stabbed up here on this red bar. And when it did stop out, wasn't that the perfect place? I mean, look what happened afterwards. So it's a pretty intelligent system. Let's see, some other questions. Can you trade on Thinkorswim? Yeah, really good question. So let's look at a Thinkorswim example. I actually have a YM example here, and I'm just going to show it to you really quick. Okay, so here's a YM chart. This is how you could set up TradeStation, NinjaTrader. You could set them all up the same. So you could set your chart up on the left and your order entry on the right with templates. So this is a 2-position template. And I've got my template set up so that there's 2 targets above, you see, and they're offset. So let's just look at this trade right here. This little box is the entry. So there's a long setup. And that long setup is 17,912. So I can come up to 17,912 right here and place it. Okay? But anyway, when you put this trade in, it's going to put handles. And you're going to slide those handles. Look at how the chart prints on the right edge. You can see it because it's in bright green. So it's really easy. You don't even need a data window. It's just right there in front of you. And so you just easily move your finger over and place your trade. And you know to move your targets. If you're going to do 2 targets, you can go to target 1 and target 2, or target 2 and target 3. You can go to target 2 and delete one of the targets if you want to trail. And then on the stop, you just move your stop down. See, the stop is right there in yellow, 17,882, and now you got your entire trade. And then if the target gets hit, one of the stops will cancel because it's attached. It's a bracket order, you see. So that's how you trade with Thinkorswim. And you just, you know, the quotes are different because it's a different data broker, but the setups work the same way. You just learn the strategy, you learn how to trade it, you go through your practice, you build your belief, and when you're ready to go live, you'll know because it's all in the steps, step by step. But it's a great way to trade. I personally use Thinkorswim to trade. I trade with Thinkorswim every day. I don't use Thinkorswim charts. I could. Actually, sometimes I do, right? Sometimes I do. But I'm a TradeStation guy. So what I'm going to do is I'll be on TradeStation and I'll see this trade on the Dow emini. It's the same trade, basically. It's a little off, a little different, but I'll see it at 17,906 and I'll see my targets, and then I'll just place it here on Thinkorswim at 17,906, right? I'll use TradeStation, but I'll place my charts with Thinkorswim. But you could use Thinkorswim and place your charts on TradeStation. You can do whatever you want. It doesn't matter what broker you trade with, as long as you're committed to your charts. Okay? This white trade got long right here. Well, the stop's down here. It's still going. This white trade is still going. It can come up. We don't know what's going to happen. Right? So Thinkorswim is very good. The setups work great. And then NinjaTrader 2. I don't have any live NinjaTrader examples, but here's an example that Coach Ron did. It's of the crude oil inventory report, which I showed you what I traded yesterday with TradeStation. Well, here it is 2 minutes after the report comes out. I know that he's using gray background. It's maybe hard to see, but that's a long trade right there. Comes up. It was able, let's see, if you missed it, yeah, it hit some targets. You can see target 1 right there, and target 2. He's got the dots really small. I'm sorry, it's a bad example. But you can see it's trailing up if you look carefully. It was a winner. And then the short, if you want another trade, also a winner. This one in black, so you can really see it. Working the same way, everything in the data window, right? When I use NinjaTrader, I set mine up with a black background. I try to get it to look like TradeStation. It gets pretty close. It looks pretty good, actually. So it works on all 4 platforms really well, of course. Let me see if there's any more questions. Is the Momentum Line an EMA? No, the Momentum Line is not an EMA. It's a proprietary indicator, but it's just uncanny on how it basically gives you some valuable information in that you could see the balance point between buyers and sellers, and that's what we want. So we know when the buyers are exhausted and then the market is out of balance. Out of balance is when you make money as a trader if you're on the right side of the trade. And so that's why it's such an important indicator. So on this crude oil trade that just came down and hitting some small targets here, I don't have the exhaustion dots on in this example. Let's turn them on really quick so you can see it. So we'll go ahead and turn those exhaustion dots. I mean, the power of being able to make your charts look how you want them to look aesthetically is really nice, because you could have more than one chart. You could have a chart with them on, a chart with them off. You could toggle back and forth. Just depends on different styles of trading. So you got a double exhaustion point here. It got tired here, and it got tired again when it came up to test. That usually means a trade in the opposite direction has a real good chance of success. All right? And especially when now the market's out of balance. In other words, the price is way below the balance point. The balance point's here. Sellers have definitely taken over. Right? That puts the odds on your side. You want to be short in those situations. You see? We can just watch this trade play out. I don't have any, let's see, I don't know if I even have trade tracking. Well, okay, so here's another interesting example. Notice that usually our stops are where the exhaustion dots are, but in this case the stop is up here. Why is that? Because I have some more of the tools turned on. This is making a key level adjustment for us, because instead of putting the stop here at 48, we know that if we're within 2 cents of a major key level, we're better off putting the stop 1 tick beyond the key level. So what's a key level? Well, with crude oil, it's a 50-cent level. Notice that that price is 45 and 50 cents. So instead of putting the stop right there at 48, we're willing to risk a few more ticks to put the stop further out of reach around the key level at 51. The calculator knew to do that. I didn't need to know to do that. I mean, I know to do that too, but something that one less thing I have to think about, because we've got it hardwired into the calculator. And you could turn it on or off, and you can even change your key levels. There's so much power. Obviously, you know, too much is too much. We teach you what you need to do, and the trade plans explain exactly what to do. But this is something that we've been doing for years, and we do it because it's effective. But notice here that we don't have to think about it. The calculator is pretty smart. Just reading some of these questions here. Well, Simone asked the main difference between the trend jumper and the counterpunch, and Will answered it. It's a good question, and the main thing is that if you think about the boxing metaphor, because counterpunch kind of uses that, trend jumper is like the quick jab, right? The quick jab to the nose, but a counterpunch is a roundhouse punch to the side of the head. The trend jumper is a single bar setup, so it's, you know, it takes advantage in a unique way of real fast patterns on the chart. the counterpunch is a multiple bar setup. It uses a completely different set of principles. And I think the counterpunch trader, they're both versatile, but the counterpunch trader is more versatile. And I think the counterpunch trader is more effective. And it's a result of the trend jumper experience, because of the trend jumper, I started exploring these counterpunch ideas. So there is the history of the trend jumper found its way into the counterpunch, but it's mostly aesthetics. It's mostly how we set up the trades where you could see them visually and you get all the information in the data window, but the actual principles and the strategy, there's not much in common at all. They're very, very different. I mean, we manage our trades in a similar way where we'll move our stop and try to get to break even, but the targets are calculated completely different. The stops are completely different. Everything is completely different as far as the trade profile and how the trades operate. So they really don't have that much in common in that regard from a strategy point of view. Aesthetically, maybe they look a little the same because of the plus sign and the targets and stuff, but that's about it. So we're watching this crude oil trade, and look at it just hit target 2. Graham, what are the yellow numbers? Yeah, we're counting the ticks. It's a 377 tick chart. So that's very handy because you can anticipate when there's going to be a setup. And this is a really nice trade unfolding. So you don't have to trade during the morning. You could trade in the early morning when we start. There are trade plans that can be developed to start in the middle of the morning or later in the day even. I mean, obviously you want to be able to take your profit and get out of the way, but that doesn't mean you have to start. You know, obviously I try to stay consistent. We do it the same way each and every time, and we have a benchmark. We have something to compare to. But a lot of times there's great movement later in the session, so you can have more than one trade plan. You can have a trade plan that handles the early morning. You can come back and do a completely different trade plan later in the morning. Like this is at 10:30 in the morning. Well, you'll remember the crude oil report comes out at 10:30 in the morning. Not today. It happened yesterday. But this is still a good time when crude oil trades really well. So you might have a trade plan where you come in later and do a second session. You limit it, but you have a start time that you can test and easily create using the same principles and the same everything. As you can see right in front of our eyes, this one's got a lot of potential. We already know that this is a good time of day typically to trade crude oil. But it's just an example of how you can use the strategy. It's really designed to be extremely versatile. So I was supposed to give out the purchase link if anyone is still interested. We are at the tail end of our fall launch for the Counterpunch. There's still some great discounts to be had on the Counterpunch. They're still offering lifetime membership in the Owners Club and a pretty hefty discount. It's getting ready to wrap up. I mean, we're almost finished with this launch. You have a short amount of time to take advantage of it if you'd like. So I want to make sure that I get the links out there for you guys in case you're interested. Let me go ahead and do that. And actually, it looks like Brian already did. Thank you, Brian. Pretty much done. Don't see any more questions. If you have any questions about the purchase of Counterpunch, there is a discount code that you can put in while you're ordering, and I can show you how that works too. Let's see. As you can tell, this is unrehearsed, live on the spot demo.
Hey, Troy. So yeah, the webinar that'll give you some even more detail is right at the top, but at the bottom are the 2 links to actually sign up. So scroll down, yeah, scroll down a little bit. There's two purchase links at the bottom.
Okay, so if you decide you're going to jump on board with us, you'll notice here's your regular price of $24.97. If you type in the word unlimited with all small letters and hit apply, Notice the monthly payments, the for-pay is $674 and the full pay is $2,500 basically. When you apply that, it's going to take off $700 and it's going to drop the for-pay down. So literally you can get started for $500 and times 4 months. Or, you save a little bit if you just pay it in one lump sum. But you get that nice $700 discount and, of course, the lifetime membership. And then you get the counterpunch and, of course, all the great training that it comes with, and the trade room. Trade room's twice a week, by the way. It's on Mondays and Wednesdays. We start at 8:45 Eastern Standard Time. And so that's a great way to learn the strategy in live time. Usually the one in there, Will joins us quite often as well. And, of course, he's the mastermind behind all the great programming that pulled this whole thing together the way it does, so that you actually get it interpreting, these concepts that I've been teaching you, and creates all these great trades. And, of course, you can ask your questions, you can get your repetition, and you can learn it 100% nuts to bolts before you ever take a real trade and risk your real money, which is, of course, the smart thing to do, right? You want to make sure you're fully comfortable in understanding the strategy, and that's the reason why we do the live room. And so there you go. That's pretty much the demo, everybody. I'm going to put a last call out for questions, give you a few moments.
Troy, while you're waiting for that, if there's anybody that would like to speak with me after the webinar today and you have some additional questions, feel free to do so. I've put my number in the chat there. I'll speak it out loud here so you can hear it also, but 440-628-5035. That's direct to me, and I would be more than happy to speak with you on the counterpunch. So feel free afterwards to give me a call. So Troy, great session. Lots of good examples of how the counterpunch works and can really benefit you as a trader. So appreciate your time today. Anything else, Troy, you want to say?
No, just I want to thank everybody for joining me today. I had a lot of fun. I love showing the strategy. And for those of you that did join us over the last week or two and are still considering it, hopefully you make the decision to join up with us, take advantage of the great discount. And congratulations to those of you who took the plunge, and I'll see you in the trade room. Keep a notebook, write down your questions, bring them into the trade room, and we'll get you answered up. And I hope everyone has a great rest of the week and a great weekend.